region around the Great Lakes has been called the heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
There's a lot of self-proclaimed geniuses out there that know the national yield, but they're all wrong.
Manage money, piling in.
Double digits higher.
So at this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
That's what brings the viewers back. That a boy.
Good morning, everybody. It's Thursday, December 18th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you get any questions or comments, please feel free to drop us a line in the chat area. I'll be sure to get to it during the show. Overnight markets here at March corn up a couple at 442.5. January soybeans were down a half at 1057.75. And March Chicago wheat was up a penny and a quarter at 507.5. We had one export sales announcement here this morning, 114,000 metric tons of soybeans to unknown destinations for 25. We also got another weekly export sales report, this one for the week ending November 27th. Solid week for corn, 1,792,300. Soybeans were kind of right in the middle of the range at 1,106,000. Upper end of the range was looking for a number closer to 2 million. On the wheat side, 460,700, which was in line with estimates. Meal was solid, 436,100. That was the upper end of the range. And on the oil side, a good week for oil. With a couple of interesting buyers, Venezuela being one of them, 25,500 on the oil side. That would have been just above the top end of the estimates there. Good morning, guys. Not much in the way of overly fresh news here. We continue to grind into the holiday markets. We got about a week till Christmas. So I guess with that, Dustin, share a few things that are on your mind this morning, and then we'll throw it around the room.
Yeah. Well, I think I still am looking at the ratios and the spreads, and it's the market is definitely not getting enough flow, is what it's saying for corn. Corn spreads have been strong, and corn wheat. I don't know if there's some sort of big unwinding of a position there, but wheat just continues to get pounded into new contract lows, and corn's finding relative support against it. This is the lowest that wheat corn spread has been yet for the March contracts. So interesting, I guess, to say the least, especially because Dece wheat versus March wheat were inverted during the delivery period. For wheat to kind of have this such a sell-off, coming out of first notice day against these other products. I don't know if that's just fund repositioning or what. Beyond that, we go into the new year, and I think you need time and pressure to see how tight things really are. The January report will be January 12th. That's really our next big, information drop from the USDA, where they actually count the stocks as of December 1st and release those. $1 million question is what is the final corn yield? Because it's definitely trading like yields are way less than the 186 that they're reporting.
Oh, very good. Justin, what's on your mind? Looking at a couple of weeks ago sales, I guess.
Yeah, same with commitment of traders, right? So,
yeah.
The week ending December 2nd, right? So 16 days ago, lots happened since then. They flipped to becoming long corn in that week. They were long 23,000 and change. Beans, they were still long, 215,000 contracts, but we were 60 to 70 cents higher, right? So we dropped basically straight down since then in soybeans. So, the next couple will be interesting. Again, another history lesson. Very unfortunate that we're not getting real-time updates, but we'll probably make a low before we find out what the number was on how much they liquidated, and there have been $2 plus moves with no information in soybeans. So that's unfortunate. As far as I don't think my mind's changed much. I think it comes down to corn just got good enough demand on these breaks that it's hanging in there, and beans and wheat do not right now. like I talked about yesterday, I think that big rally up, obviously we had the funds flip to very close to a record, basically tying an all-time record long in a short period of time. And in my opinion, the Chinese bought their, 12 million tons on the board. And, we had that big, exchange for physical we talked about yesterday. I think that business is already done. That's why we broke, because we're not seeing additional business on this break. I think it was already bought. And we're seeing these announcements now kind of catching up. But so however you want to spin that, if it's, bullish or bearish on soybeans going forward, I do think January 12th will be, we're all focusing on, most people are focusing on the corn yield. I think beans are going to be really interesting too. It's like, oh yeah, we completely disagree with corn yield and beans. I think it's, we've talked about in the show a lot too. It's just no one really has a good feel on bean yields, but a bushel or two change is kind of a big deal on beans. If it were to go down 2 bushels, I think it's a completely different bean market, at least for a period of time. Now if South America is perfect, it, probably doesn't get a ton of wheels, but if any kind of hiccup in South America were to happen and you get a yield reduction, I think beans are probably too cheap. If the yield goes up and South America is good, they're too expensive. And I've said this for months. Beans just have more risk to the upside or downside than corn. I think corn's in a big supply, big demand market. So that's why I think it's trading the way it is. It's finding sellers on good rallies and buyers on good breaks.
So Justin, James Costello comes to us, and I guess maybe share a few of your thoughts. I know you have in the last couple of shows, but what would give you optimism out towards the new crop soybean contract? Just give us a couple of, ways that things could get pretty friendly out there. Obviously, you get a yield reduction over here, and stocks get really uber tight. But what else is on your mind there?
Yeah, I think that's why it's such a pivot, because depending on what the January report says, I think changes out forward dramatically. And then South America, not to be Captain Obvious, but if you start slashing some production of, honestly, corn, beans, or both, either or, it just makes things more interesting. You've got the ratio at 2.33, which is kind of a no man's land. It's been drifting down. So currently the market's, I think trying not to lose too many corn acres for next year. And without a bean story right now, it's, beans are letting it happen. If you were to, tighten those fundamentals a degree or two in beans, and if you did it in corn, all of a sudden the new crops look, I think, pretty cheap, especially when you're really close to PLC prices or even below in some cases, like corn and, I don't know, is beans, what's the bean PLC price, Dustin?
It's like a 1072, I believe. I don't.
Right. So we're, call it 9 cents below in corn and within 2 cents on beans. So I think you're at good value areas, and you just need a spark to get something to be optimistic about out forward. So that's kind of what I'm waiting to see. Again, trying to be open-minded here. I think to say new crop beans need to break 50 cents or $1, I don't think makes a lot of sense. And for corn, I think we're all at support prices, honestly. So why go hedge a whole bunch of stuff right now for new crop at prices, much below here? I don't see a lot of incentive there. So I guess that's the most optimistic part for me, is just not a ton of incentive to hedge out there right now.
And it's going to be super interesting as we start getting through the new year and certainly into February, with the increased subsidies on ECO and stuff like that, and what the willingness is going to be to pay up for crop insurance and plant corn, if things don't really shake out, like the economics of it show you corn,
Yeah, like it or not, this is a new fundamental. The way that these big policies are being subsidized, it's how you're going to have to adapt to marketing, and being really good around those policies and knowing how they kick in with Farm Bill, I think is going to, I think I've said this before, maybe a week ago, but it's going to be what separates good marketers from bad marketers, is really understanding how these things all fit together, in my opinion.
Yeah. Dustin, maybe a few thoughts on that as well.
No, I agree. I mean, yeah, it's when you're negative margins and you're, I think that the biggest thing is just making sure that you have accounted for everything. We've had this discussion a number of times, but it's not as clear as just like it takes me this much to grow corn, so I need to sell it here and wait for that price. I think you need to keep the balance of all of these things. It's been doing this since 2007, and this is the strongest farm bill. I think most people always think, well, if I get something from Farm Bill, great. I'm not going to make that part of my consideration for marketing, though. I think that's where you need to change it in this environment when we're talking about $100 an acre losses across many of the acres in this country.
Well, and when not only the Farm Bill, right? You add in 95% coverage with 80% subsidies.
Yeah.
90% if you're a new farmer.
Yeah.
Just real big positions that are going to start happening in our markets. We talked about a lot last year. Just, pretty soon it's going to be the biggest position is these readjusting put levels and strike levels and how the market trades around those. And I think it's going to be key understanding all that.
Yeah. Just getting technical and measuring it, and the decisions kind of write themselves if you can put it all together, because you can see where you're vulnerable. So yeah.
Well, and the key here too, guys, is let's have these conversations early, right? I think this is going to be a year that you really get out ahead of it and be ready and prepared, so that when we're establishing those crop insurance levels and everything like that, you've got a plan and you really know how you're going to react and get yourself positioned, right? Becoming more and more proactive is going to be key, as we've learned from this year and going forward. Don't really see that changing much, at least right now. Ryland, real quick, let's move over to livestock. Nothing real exciting here in cattle. Last couple days, coming into cattle on feed, obviously tomorrow, and then saw a big break in cash hogs yesterday, which I think got everybody kind of up in arms. So, what's on your mind?
Yeah, absolutely. Just a sideways chop. Just feels like we're coiling right now. I mean, I think everybody just really wants to see how the South is going to shape up this week for cash. So far, really haven't seen much. I mean, it's been about a 227 bid, offers around 231. So I think there's still some general kind of optimism here, but overall, just kind of feels like you just got a kind of a lower beef market. So the sentiment is just a little bit cautious on this side ahead of Friday's report. So I think everybody's just wanting to see how far placements are going to drop here. I mean, we're already expecting kind of a 10-year low. The market's kind of made its move. I mean, obviously the longer term projections are still going to be for tight supplies well into next year. And I think that just kind of sets the bullish bias, but we've come so far so fast. It looks like the market's just kind of taking a pause and looking at the day to day. But yeah, on the hog side of things, a cash led break, no question about it. Kind of said it yesterday. Just kind of felt like the market got a little bit ahead of itself and was not going to react to cash falling below the $70 level. So cash was actually just kind of holding firm yesterday, up 15 cents, 69.71. So it just feels like this, carcass has been kind of leading this rally here. We've seen ham prices jump pretty good, picnics jump pretty good, but everything else just kind of left in the dust right now. So I don't know if that's enough to really kind of keep the momentum going, but obviously we're, kind of trading sub that 100-day moving average in both hogs and live cattle. Feeders are using that as support right now. So I think those are still kind of crucial areas just kind of going forward.
Very good. Thank you. And Jim, thanks for the comments here this morning. I think he brought up a good point, Justin. He's basically summarizing what we're talking about in terms of watching government policy, waiting on WASI. But, it's not just a wait and see. It's have flexibility and be open to have an open opinion about the risk that you have, right? That's our main takeaway. It's just understanding, at this position, you've got no crop insurance. If you're sitting on bushels, you're sitting on a trade. Right. That's the take.
Yeah, 100%. And, I do want to add a caveat to that. When we talk about PLC for new crop, I think is a different conversation than the government program that's currently active for the current crop year. So a lot of grain, we don't know the exact numbers, but excuse me, a lot of grain was sold already for corn and beans. So if you think about that, it's the marketing year average price of all bushels sold during that marketing year. Obviously, it's heavily weighted towards the first half of the year, just for obvious reasons. So a lot of that, call it whether it's 30 to 50%, I'd argue it's probably higher in beans just because of the move that we had, and just the selling patterns that we've seen over time where more farmers sell beans earlier and store corn. So those PLC prices have already been averaging on a large amount, meaning that, let's say it's 40% priced, 40% of your put floor is gone on the PLC part. So every day that goes by, every bushel that's sold, you're getting less and less coverage. And so to Dan's point, between now and, call it March 15th, when you get new crop insurance coverage, you're completely naked on, call it a crop and a half. So, what I'm saying as far as, waiting and seeing is more just, having an opinion on market direction. And I do think the old crop corn and bean story is different from a risk perspective than when I'm talking about on new crop. So when you look at old crop, that's where, if it is a wait and see, it's, get some level of comfort, know what happens if you do break. You can always break for whatever reason. As we've all learned these last 5 years, something goofier happens every year that may or may not be related to grains. So, if corn were to go break back to contract lows, I think it would be quite disastrous for a lot of growers out there. And it might not even have a good fundamental reason. Anything could happen and we just break, your stock market falls apart. A number of things could happen. So you always want to have that, that backup plan. If you are in the wait and see mindset, at least have what we always call plan B, whether it's put options or something, just so you can live with, what happens in that circumstance. So a lot of years you see a really big move and you can sit there and pound your fist on the table and scream at the clouds, but it doesn't bring the money back. So it's always good just to have something just in case.
Very good. Just came into the open here. We got March corn up 2 3/4 right now, 443 1/4. January soybeans are down 1/4 at 1058, and March Chicago wheat is up 2 cents at 508 1/4. Tomorrow is Friday. We will have Fun Fact Friday, so be sure to tune in. It's always a great way to go into the weekend. Also, we appreciate everybody's thoughts and comments here this morning. If you wouldn't mind, throw us a like, certainly subscribe. Doesn't cost you anything to do so, and it'll keep you up to speed on everything that's going on with AgYield. So again, thanks to everybody that supports the show. We're doing this live every day that the markets are open on X, Facebook Live, and YouTube Live at 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a great day, and we look forward to talking to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.